you do have. That's so much more important than anything else. And it kind of goes down to the point of what's a worse thing for you, losing money or missing out on the opportunity to make money. I know what my position is, and that kind of drives how speculative I want to be. And maybe we can get into this a little bit more going forward. But yeah, it's definitely that's in investing. You can't have that mindset. You gotta be happy with the gains you get when you get it. You can never let a green trade go red.
Yeah, that's what we've been seeing. So let me go ahead and put out this tweet real quick. Just let people know that we are live and we can get started because it's already power hour. All right. And we'll just put out that that is starting now. And okay. What's going on, Brad?
Not too much, man. How about you?
Pretty solid morning. A little groggy from the Super Bowl party. Had a few of those. What are they called, Evan? Those, is it happy something? Happy, what's the Portnoy or whatever it is?
Oh, high noon.
High noon.
The high noon, yeah. Had a couple of those. So
those are the go-to for me as well.
A little groggy, but getting by. But let's dive into it. I think we can get Sarge up here and we can get going. I know Catherine isn't going to be able to make it. Exclusive is not going to be able to make it. He did send me, I guess I tagged Exclusive by accident in that post that I put out. But he did send me some of his plays if I wanted to share them. So I do have those, and looks like we're about ready to go. So Sarge, you want to kick us off and chat about today in the market?
Sure. To me, today's kind of it's almost a quiet day, even though the Dow's down a lot. I mean, it's really, I think we got a couple of, we keep talking about false flags being launched by the Russians and as a premise to an attack or something. I think we're getting a lot of false flags ourselves. The way I see it right now, there's three boxes we can put stocks into, or the markets, financial markets in general into right now. There's the macro slash monetary policy box. There's the geopolitical box, and there's the earnings box. So we still have some earnings this week, but earnings season is starting to wind down. We're getting towards the retailers. The geopolitical is kind of taken the forefront. It's made the defense stocks quite volatile. They were strong until today. Today that trade kind of fell apart. And the lead box is going to be, maybe not at all times, but it's always going to come back to, at least when you're in between earnings seasons, the macro and the Fed. And I think that's the main event this week probably is, I mean, we have on Thursday, we have on Wednesday rather, we have retail sales and industrial production. That's going to be important as far as GDP goes, because first quarter GDP is running at like an awful rate. It's like 0.7 right now. But tomorrow morning, we got PPI. And the reason why PPI is going to be so huge this week is that it's actually expected to decelerate. January PPI is expected to decelerate both at the headline and the core from the pace it's been running at. So PPI led CPI on the way up when inflation started heating up last year. This could be a significant turning point if PPI comes in, I can't say cold, but cooler than it's been. It could mean that maybe we do have another CPI report ahead of the next Fed meeting in March. This whole thing, and I'm not saying that we probably have gotten too hawkish, but I think you saw that James Bullard really didn't have the impact on the markets this morning that he had last Thursday, and I think I'm hoping anyway that we're setting up here for maybe I don't know what you want to call it, but for an environment where the Fed can proceed as they wanted to instead of having to ratchet things up as if they're in a panic.
So what do you think the Fed's going to do?
Well, if the inflation numbers come in, if the PPI is a little hot this week, tomorrow, and the CPI for February in March remains high, well, they're going to have to be more aggressive. They're going to have to go 50 basis points. I think they should go 25 basis points. I think they should act as if they do have their shit together and proceed almost as normal. I'd rather see them focus on the balance sheet a little more aggressively than on the front line on interest rates, because interest rates will certainly slow down Main Street by drawing liquidity out of an overly liquid economy, which we have right now. I mean, yeah, it's going to hurt us on Wall Street. There's no doubt about that. But I think it'll hurt us before it hurts Main Street, and you might be able to protect Main Street. If you can do this right, and no one knows if you can. It's going to require such finesse. It's you're going to need a scalpel, not a sledgehammer. And no one knows how to do this because no one's ever done this before. No one's ever tried to unwind a $9 trillion balance sheet down to a $4 to $5 trillion balance sheet. No one's ever tried to come back from quantitative easing. We've pushed it to the brink several times. The Europeans even went negative. The Japanese have been mired in quantitative easing basically for 2 to 3 decades. No one's ever come back and properly normalized monetary policy when they've gone so far over the ledge in terms of being liquid. So it's going to be difficult, and it's going to create a volatile environment. I saw Goldman cut their S&P gold target for year end this morning, and I forget who did it last week. Somebody else did it ahead of them, and that's probably the right thing to do. It's going to be a tougher year if they go ahead and try to tighten policy, and they have to tighten policy because it had gotten too loose. But I would like to see it done in a measured and orderly fashion. And if they jump the gun because they got their socks knocked off last week, and they start leaning into a 50 basis point rate hike in March, and another 25 basis points in April, and then another 50 in June, which is what they were pricing in, I think they would decimate both the market and economic activity.
Pretty interesting. They have to kind of walk this tight line rope. Evan, do you have any thoughts on that? I guess in regarding the Fed and effect upon the market.
Well, I mean, in general, right now we've been in a market that is very determinant of the Fed, and we've had the saying of "Don't fight the Fed." That goes both ways, and I think that's really important to realize. And another point, I don't remember who exactly brought it up the first time I've heard it. I'm definitely recycling this from someone else, but a lot of the sentiment and the feel of how we're going to be doing this going forward is equally as important as what actually happens. That conference that Jerome Powell does after the FOMC meetings. I don't know when the next one is or how all this is going to work in there. I can't give you exact dates, but I just know that the tone and what they're saying for going forward is as important as what actually happens in that meeting. So I think we're pretty set on the fact that at least 25 basis points is going to happen. And if it doesn't happen, that's a huge surprise. And what I've noticed is, how the market works. A lot of the times we will have an unknown event coming or a known event coming up. And, the market will start to bake in and price in what they think is going to happen. And it's really important to realize it's not what happens, it's what happens compared to the expectations. So that's also very, very important to realize and kind of just get I know Markets and May have tweeted this out a couple of days ago, and just really kind of looking at what analysts and what consensus expectations are for that report, so you can kind of basis that. That was much more of a statement than a question out there, Goff.
March 16th is your next
March
FOMC
16th?
meeting. Yeah.
Perfect. And when are the minutes released for the last one?
The minutes are released this week.
Soon.
The minutes they're Wednesday. Let me see. Hang on. I think it's Wednesday night. Yep, Wednesday night, 2:00. Well, Wednesday afternoon, 2:00 in New York.
Okay, so that definitely is the next thing we'll be watching, seeing how their commentary was in the last meeting. There was a lot of I'll pull back on saying a lot of expectations, but there was a decent crowd of people who thought we were going to raise at the last Fed meeting. So I'm very interested to see what the actual conversations were there on the back end. So I think that's also something to watch.
Yeah, I do agree with the Hawks that they probably should have stopped with the quantitative easing with the purchasing of assets last month. They should have put an abrupt halt to it because it's silly to buy assets, mortgage-backed securities and treasuries in February, knowing you're going to go the other way in March. To me, that's absolutely ridiculous. Why would you walk half a block south so you could walk a full block north? That's just dumb. That was a mistake, but it's not a terrible. It's probably not a terribly onerous mistake, but it's being foolish.
Perfect. Thank you, Sarge. Okay, let's get everybody a little bit involved. And again, since during Power Hour, if there are any specific plays that you are watching or entering, definitely feel free to share those as well. I'm looking right now at QQQ calls. Exclusive sent that one to me. He said he was okay with some of this stuff being shared since he wasn't able to make it today. So he was looking at the 348 calls at 65 cents. So that is QQQ. Let's see what those are trading at now. So it looks like they probably went down a bit because Qs dove a little bit. So you could get those for a little bit cheaper even. Those are the 348.65s for me. But again, looks like that is a roll up for him. So I would just be careful diving into there unless you already have profit on the day. And just be cautious overall. A lot of stuff ran up early in the day and is now coming back down. And I think he's looking to, potentially finish positive here, but you definitely have to be careful. I'm going to be taking a little bit of a closer look at the Qs just on multiple time frames to get a better idea of this. Looking on the 30-minute, don't love it. Just broke underneath the 20-day moving average on the 30-minute. Don't see too much support right underneath besides, the lows of today. And on the session chart for the Qs, I think we're still under, we're under the 200-day moving average. We came down a little bit lower today. Again, as long as we stay above 333 or 334 right there, I think we're okay in territory, but we would love to see it come back above a 351, which it did try to do today, and it couldn't. It got all the way up to right under 351 today, which is where the 236 Fibonacci retracement currently is, and it rejected it. So it's coming back down. So it's kind of now trading within a bit of a range between the 351 and the 333 area. Okay, Brad, how's your Monday going? What are you looking at?
I've been pretty boring, honestly. I haven't done anything. Just kind of sitting on my hands. From a macroeconomic perspective, just want to echo what Sarge was saying with the backward-looking inflation indicators look really scary, like the consumer price index or CPI. And then when you look at more forward-looking indicators, like inventory recoveries across industries and like the PPI, which is more of a forward-looking indicator than the CPI, it's starting to look better. So I've been saying for the last few months that I think inflation fears will slowly fade away throughout 2022. It'll take time, but I think it will happen throughout this year, and I continue to believe that for a lot of the reasons that were just mentioned. But in terms of stocks and transactions and things I'm looking at for the week, no transactions today. It's been a slow couple weeks in terms of transactions, which is how I kind of prefer things to go. Because when I'm transacting a lot, that means new 52-week lows are generally happening a lot. So that hasn't been happening, which is nice always. And then earnings this week is Upstart and Trade Desk. Trade Desk, there's never any drama. They're a beat and raise machine. It's very recurring, very highly visible revenue. So not really much drama associated with those reports. But for Upstart, which has essentially no recurring revenue, and is very tied to macroeconomic climates and is very tied to stimulus checks and things like that and institutional demand. I'm really excited to see that 2022 guide, to see how much of its success was exogenous and how much of its success was really driven by what value proposition it brings to its bank partners and capital market investors. And I'm optimistic. I think they're going to tell a good story, just like they have the last 4 quarters. But as always, I reserve the right to be wrong, and I'm excited to digest all of this information that's about to cross our way in the coming days. So that's really what I'm focused on for the week.
Okay, I'm sorry for my mic was going on mute and unmuting there, but I did catch what you were saying there. But yeah, there's no need to rush it. Only Monday, so definitely agree with what you're saying, and excited to see this week through earnings. I know that you'll be putting out some write-ups on, I think you said Upstart and some others. So we will be catching those as you put them out. Thank you, Brad. Okay,
thank you, Wolf.
Matt, what have you placed any more trades today?
Hey guys, can you hear me coming in? Well, I'm driving, so if it's cutting out, let me know. Today, no, I didn't, man. We looked at the market this morning. We got some signals of unusual volatility. Anytime we get this this area where VIX is a fairly I guess quick to hedge instrument. When you start seeing unusual activity in the VIX instruments, you have to start to play caution. When the VIX itself becomes volatile, the market can become illiquid to the point the floor will drop out. And I got the signals today that the market was going to hit a level. We talked about all the liquidity paths were basically going to retrace a little bit and possibly sell off. We saw that going into the end of the day with just about every stock I was looking at. I had a couple things on my list. I was looking at some of the mega caps We had Apple and Tesla this morning, AMD, and actually AMD and Tesla turn out doing better than what a lot of the rest of the index did. But VIX is still in that problem area. And I think that because of the sensitivity to Bitcoin that some of the chip makers are going to be facing, especially NVIDIA with earnings coming up, I really like to just see us get over that hurdle, me make a determination that the entire market kind of becomes, I guess liquidity fully restored, even though in a general sense, the market's extremely liquid here. And we see that in the futures markets, and some of the reports we read show that. So people aren't really scared of being long here. People are just kind of nitpicking into which assets are going to fight inflation better. And as soon as we don't show that the equities market is actually going to liquidate and sell off, it, asset managers have been liquidating stocks since last July, and this is the first time they started buying again 2 weeks ago. We see that when the hedging in the futures and market by looking at committed traders. So as people are starting to buy again and shorts are covering, it just kind of shows that there are buyers at this level, and it just comes down to when do the shorts start covering again and the market starts to go up. And I think all things might bottom out and go up if we get through this week and kind of turn out to be okay. I'm a big fan of the semis. I think the semiconductors are going to be the hottest thing this next year. And if we debottleneck and everybody starts to get stuff back on the shelves, I even hear NVIDIA. I think they're coming out with like a 4 series card sometime soon. Maybe this year if I can remember. I recall, but at that time, whether Bitcoin starts rallying again or not, or crypto starts rallying again or not, you're going to start to see, people just ready to go out there, and COVID's kind of slowing down, and people are just ready to go out there and spend money, get their jobs back, and get back to a normal life. I think that that's always strong for the economy. And in general, this week, once we get through earnings and stock market doesn't sell off, there's nobody left to sell. They've been selling for 6 months and it hasn't crashed, or 7 months. So I really think that we're in a very decent spot for equities to be the lesser of all evils, which is what causes a short squeeze, which causes a rally. Fixed with, you watch the treasury notes are completely plummeting. That's because the yields can't compete with inflation. So you have to have the price drop for the yields to go up and make them competitive. And we're somewhat seeing hints of that, but it's still not competitive here. So I really think there's going to be a mad rush to equities if we get through this week and market doesn't. So it's going to be almost like hard to pick a loser, I think. And again, that's not trading advice for everybody out there, just my opinion, but everything I think looks good at these levels. And NVIDIA is my big guy that I'm kind of, gunning for. And even if it takes a dip post earnings, anything above 200 to me on NVIDIA is a steal for the next couple of years. I really think that that's a huge growth industry, especially when it comes to the push in the metaverse. And, you're going to start to see a lot of these companies. One of my favorites, Corsair. Those are the ones I'm looking for like longer term plays. So that's kind of where I'm at right now. I sat out today, didn't trade, kind of went out and enjoyed my day. Kind of glanced at it a little bit on my phone, but I try to detach when I'm not trading, because I don't want to be enticed to like throw orders on my phone, shove it in my pocket, and then I'm forced to look every 5 minutes. So I'm pretty detached. I came back and look, and stocks started selling off at the end of the day as expected. This is just volatility. It's not crashing or anything. VIX is causing the expected ranges to move. So just people are just kind of waiting right now, and we're just gonna have to see through the end of this week. And that's kind of where I'm at now. But those are kind of what I'm looking for to invest in. And I'm purely S&P and QQQ as well. I think SPY and Qs are going to be hot next couple of weeks, as long as there's nothing bad to come out. We get through FOMC, we get the 50 basis point or 25 or whatever it's at being, and then the market, if they don't freak out after that, I mean, what else could shock it, right? So I think we're in a good position to kind of wait one more week, is what I think. That's my thought. No plays today.
Okay. And that small account challenge. So do you think you'll be, yeah?
Oh, sorry. Say that again. I had to turn my.
I was going to say, do you think you'll be playing NVIDIA earnings this week?
So the small account challenge that I'm doing is it's a futures account. So what I do is I show how like a trader would build a small account to, maybe, for instance, you go to become a pattern day trader with 25K in a margin account. And so to grow to 25K, I've done this plenty of times over the years, but I'll put in a small amount and I'll trade it up. And when I'm at the 5, 10, 20K level, it's always actually futures. And again, futures has its own risk. This is not to convince people to do it, but futures is when you know what you're doing, not a terrible starting place with micros and nanos to kind of slow roll your way into a bankroll. And I demonstrate that just to show. So playing the earnings, yes, I would probably not play directly for the earnings, but in the overnight session, you can start to maybe make futures plays, but even small account challenge, I don't make overnight trades. I just kind of do that one thing every morning. This is day 11, so I haven't lost a day since we started. We post the results on my Twitter and stream it up, so you guys are welcome to check it out. But I think that after NVIDIA, once it dips, if it dips or even if it rallies, I really think that it's going to be pretty lucrative if the market starts to become non-volatile. Longer trades are always easier to take than shorter trades because of the volatility. You have less drawdowns and easier to manage positions when you're day trading. And my scalps are literally 30 minutes to an hour at a time, and I look for that ideal opportunity. And if the market's non-volatile and bullish, that's the easiest way I found in the challenges to show how to grow. Betting on shorts and betting on volatility, you have more movement in the market, so it's harder to manage a position. We always talk about risk management. You take bigger drawdowns when trying to short a volatile market than you do trying to long a bullish market. It's easier to make mistakes in a bull market. And so in this particular sense, when things are at the level that it is now, I always choose to sit out than try to play the short side. I don't want to risk a loss. I want to wait for things to normalize. And it's kind of the best way to do it, I think. And we're doing pretty good. So not directly play the earnings, but if the next day things turn out to be okay and we get some, hedging squeezes, I think that's kind of a great time to start aggressively taking some longs. But even so, I ratio my risk based on the account size anyway. So I'm not going to go all in long. I'm just going to take it one day at a time.
Okay. Thank you, Matt. Appreciate the insight there. All right, Evan. So we're moving through power right now. From stuff that you put out today, what's your general feel for what the news has been like and how it has affected the market so far this week? We were, I think, kind of told a lot last week that this would be a very news-driven market.
I think the news definitely today before the some stories about Russia and Ukraine were a lot more stock specific. We were hearing some stuff in I was looking at stuff for AMD that they completed their acquisition of Xilinx and that Lisa Su will be taking over as chair of the board. There was a little bit of talks and kind of reverberations, if that's the right word, in here from the Super Bowl yesterday. So I'm looking at the Coinbase commercial where you look at the cost per acquisition that they got on that website. They spent about 14 million, got about 20 million clicks. So when you're doing crypto and everything like that, that tends to be a pretty good conversions and stuff like that. And then when a lot of the reports came out about Ukraine and Russia possibly getting in quote unquote attack positions or whatever, and that definitely did kind of move the market lower together. So we'll have to see with that. We don't have too many earnings after the close today or anything like that. There are a couple, but nothing too huge in there. I know Avis, the used car company or more car rental company in there, reports earnings today that some people might care about, especially with CPI, but nothing too much there. And yeah, I think that's a pretty decent coverage there. The stocks are definitely, it felt like moving a little bit more individually, some up, some down, and obviously it's a market full of different companies in there. But the Russia Ukraine news definitely did move the stock slower. And just one quick note on that, my very base level opinion. What do I know? Who knows? But if everyone is saying, "Hey, you're gonna do something on the 16th," I promise you, my real plan is not actually do something on the 16th and just do it another time. So that's all I have thoughts on that. That's my simple opinion there, but who knows? We'll see how that develops, and I think there's a lot to unpack going forward.
But didn't that seem ridiculous to you too? I mean,
Oh yeah,
it either this is real information and we have an asset inside the Russian command, and we're telling the Russians, hey, one of your generals is on our side, you probably should kill him, or some of this stuff is being blown up for some reason. I mean, yes, it's true. Russia massed troops on the Ukrainian border and they have ships off the South Shore in the Black Sea. Yeah, that's true. But what do they gain if they invade? They don't want NATO on their doorstep, but if they take over the Ukraine, then NATO's already on their doorstep. So he wants a buffer. So he definitely wants an independent government or the perception of an independent government in the Ukraine, at least in the western part of the country. So I think he's in this for the diplomatic leverage. He wants a couple of things. Okay, he wants higher natural gas prices, higher oil prices. He probably wants some kind of restoration of the Cold War to increase Russia's prestige back to what the prestige he perceived as the Soviet Union's rightful place on Earth. But if he if he goes a little too far with military activity, with some kind of kinetic activity, all his leverage is out the window. Right now, he's got President Macron kissing his tail. He's got President Biden kissing his tail. Chancellor Scholz is going over there tomorrow to kiss his tail. He's got all these guys coming over saying, "Okay, we'll do this. We won't try to get draft Ukraine into NATO. We won't accept their application. We'll stay away from a couple other states. We're probably going to put some limits on the numbers of missiles and types of missiles we have." So he's getting something for nothing. And I think that was his plan all along. I could be wrong. He could invade tomorrow. He could invade Wednesday. But I mean, and I've never led more than a handful of men. I was only a sergeant. But if I was gonna hit you tomorrow, I'm not going to tell you I'm going to hit you tomorrow. I mean, it's just ridiculous to me that, and I think somebody had something to gain by sensationalizing this entire situation, and I don't, I guess we'll figure out who later, besides Putin.
Yeah,
Yeah.
I think just to quickly equate it to some other stuff, I think it kind of goes down to the point, like, 100% very different topics, but with the Fed, that, like, one thing is what they actually do, another thing is what they say, position themselves, and everything like that, building leverage, do other stuff in the future. I think that's what a lot of what is happening here as well is, obviously this is not my area of expertise where I'm going to know more than someone else, but there is definitely, you have to, everything in life is a game of percentages, and you really got to look at what's the other side. Why else would they be doing this if their main goal wasn't to invade, and just kind of put a percentage to it. So I think that even with all these headlines, war is still not 100% the possibility in there, and that makes it to an interesting thing you can invest around.
So, sorry, do you want to respond to that?
No, I mean, if yeah, so have you been able to trade around it? Yes, for sure. I mean, I traded the defense stocks very well last week, a little less well today. I did initiate Kratos today, Kratos Defense, which is drones. They help out on some of the contracts with hypersonic missiles and that sort of thing. Their biggest clients are the Air Force and the Navy, but they also, the Army does a lot of stuff with them too. So Kratos is they're a good high tech, that kind of unmanned warfare type company, and and I'm trying to get off some puts and some calls around the trade, but it's the options markets aren't that liquid in that name. So right now it's just an equity position, but it's not the intention. So that's my only change in my stance. Northrop Grumman was coming up on a pivot point as of Friday night into this morning, and it looked like, if tensions had remained as high as they were this morning, we might have cracked that pivot point. But there's been a level of resistance for all those type names, so that's backed off a little. We'll have to make another run at that. Well, actually, for the good of the world, I hope we don't make another run at that pivot point later this week. And that's probably all I have to say about the defense contractors for now. But Raytheon, Lockheed, Northrop Grumman, and now Kratos Defense are my longs in that space.
Sarge, what do you think of Palantir? I know it's a FinTwit favorite, and it's a black box. It's hard to really know what's happening in there, but I feel like they'd want to be included in that index of stocks or something like that. At least that they argue that they were. What do you think about them?
Yeah, I'm long Palantir, and it's a frustrating position if you're long it. You know that. They're reporting this Thursday, looking for 4 cents. I really thought they would do better in this, in this environment of these last couple of weeks with so much information and intelligence and disinformation going back and forth between the European states and other parts of the world. So I thought they would be a beneficiary of this tension in Eastern Europe, but so far we're not seeing that.
So, bringing it back into some of the live movement. So, true to form, Bullish Rippers Power Hour has started off green. We'll see what happens here. We're pulling back a little bit on SPY. Take a look at the Qs. Yeah, pulling back a little bit on the Qs too, but also it looks like I think we're kind of in the green. We're about flat on the Qs right here. So one more time for anybody that's in the audience, welcome in. We are doing a bit of live trading. We're talking about some macro and micro events that are affecting the market. We were also live trading for a while this morning. For anyone that's unfamiliar with myself, my name is Golf Blacksburg. I run the Wolf account, which you see up here co-hosting. I do 2 spaces a week from the Bullish Rippers account. This week, they are both going to be power hours with live trading, technical analysis, and other forms of financial talk. Just a note, this is all for ideation purposes. Please don't just place the trades. It's really important to use this for ideation purposes and then to take it and have your own process, because if you are simply following someone else into the trade, they're probably not going to tell you when to sell. And that's the real key here, to not let the trades go red and to actually booking a profit. However, with that being said, again, if you like a lot of what's going on in the finance world, I'm doing 2 spaces from this account each week. Evan, which is the stock market news account up here, also coasting, is doing a space each week, as well as he does a lot of posts from this. I recommend checking out some of the posts we have going on here. Amazing graphics inside the Bullish Rippers account, a lot of different, earnings and other type of news and talk along those lines. So if you're not already following it and you're following either the Wolf or the stock market news, this is a great account for you to add to your timeline. We'll definitely brighten it up. You'll always see us, interacting and communicating via this account. So it's really another one to add to your repertoire. Evan, anything you want to add to that?
No, I think that was pretty solid. Big shout out to Bullish Rippers. I'm trying to do some really cool stuff. We are trying to do some really cool stuff through there. And, all I'm going to hint at here is next month, look at what it is. Maybe look at some cool stuff that tend to happen in March in history, what it's known for. And we got some cool stuff coming through Rippers. There'll be a little bit of a hint of some cool things we might be coming soon. So very excited for that. Make sure you're following Rippers. And you'll see all that stuff at the top of your timeline. Yeah.
Cool. So I brought up masked trades. I know you've been on some spaces with us with Stock Talk. Have you placed any trades today? Anything that you like going in Power Hour?
Hey guys, yeah, thanks for inviting me up to speak. Pretty cool. Yeah, I was long natural gas over the weekend. I like playing it through ticker UNG, United States Natural Gas Fund. It's I like the way it moves. It's not nearly as volatile as some of these other, ways to play oil and gas on the microcap side of things. I do enjoy a good penny oiler when the headlines get hot like this on oil. But what I've noticed on a lot of the names that I typically like to play is they're just not moving in sympathy with oil like they used to. With oil approaching 100, I thought a lot of these typical go-to names would have seen some more volume. So when that trade kind of broke down, I was in it very early, so I was able to scalp a few of them. But I did go heavy on UNG on Friday, which worked out well. And maybe I got a little lucky, but I got in even before that midday headline on Friday when the whole world was coming to an end. So I got in UNG at about 13 and a quarter, 13 and a half. I was scaling in, and I swear within 20 minutes of getting in, it started moving. So I made a nice trade on that. I took some profits by the end of the day, being that I really didn't want to hold good size over the weekend because these headlines are crazy. And you can't place a trade on a Saturday afternoon if the headlines turn against your long on the gas side. So took a good amount off, held some because I thought the trade was still bullish into this morning, which it was. I was up early this morning, pre-market, looking at obviously the headlines on the Ukraine tension, and then we got that headline that the talks were more imminent, right? So right away it started selling off pre-market. I dumped the rest of my position, and in hindsight, it looks like I got shaken out of that natural gas. So the rest of the day, I've been kind of just watching the headlines, watching this whipsaw. Haven't really been putting more money to work today. I'm kind of just letting everything kind of settle out a little bit. I'll see where we're at tomorrow. I'll do a good prep tonight. But right now, I'm very just focused on the natural gas, the oil sector, and a little bit on the defense and aerospace sector as well. I think that's kind of where there's a lot of eyes right now, and people are just looking for a reason to bring in the volume into those sectors. So that's kind of where I'm focused. But I'm always kind of watching the scanner for anything breaking out. That's more my style in general.
What are your favorite names in the oil and gas space right now?
Nothing too sexy, to be honest. I usually like the dirty ones. Like I play, I play like the U.S. Well Services. I play HUSA, HUSA. I like SCO. On the up and down side of things. What else? I got to look at my watch list. What I'm even looking at right now, but pretty much all the real dirty penny ones, the ones that get all those crazy movements. I like to play with those. I think actually a good one on the gas side right now that no one's really it's a former runner, but no one's really eyeing it right now is Gevo. It's definitely a natural gas play that's not getting a lot of attention. I think one of the last PRs they had, it was that they were expanding into like a new natural gas field or something. So they're somewhat focused in natural gas, and it's a former runner. I think their primary business is like aviation jet fuel, if I'm not mistaken. But I'm trying to eye the ones that not a lot of eyes are on yet. And if this natural gas story, keeps up its momentum, people are going to weed these out, and hopefully maybe I can get in on them early. But as of right now, I have no positions. I got, shaking out a little bit on the UNG this morning, and then it kind of reversed back to high day, which I think was like 1450, and met a little resistance and kind of pushed through it this afternoon on all this crazy headline action. So,
Okay, awesome. Appreciate you sharing that with us. We'll definitely, keep you up here. And if you do place any trades or anything comes to your attention, feel free to just throw your hand up.
thank you. Yeah, thanks for having me on, guys. I appreciate it. I like everything you guys do on here. It's very organized and very focused, and it's definitely a lot to gain from it. I know that I've gained a lot from it, so I appreciate the time you guys put into this stuff.
Absolutely, it's a pleasure. Brad, saw your hand fly up there.
I was just waving.
Oh, okay. Sounds good. All right, PB, what's going on? How's the rest of your day been?
What's up? What's up? It's been good. I just got back from my driving school, and I came back to the markets like going crazy and volatile. I didn't even see what that huge knife that SPY did, but I got pretty lucky because I had some BA puts, and I already had my sell in, so I made like a nice 35% on that. But no, nothing much. How about you guys? How you guys been lately?
I took a short on Netflix when SPY started dipping down, and I played that, and I sold a little bit too early, but really not too bad. I sold around like 150. So I ended up clocking about 14% on that.
Nice.
In and out. No need to stick around with it and let it go red. Or I just set my stop. I sold half, and then I set a stop on the other half, and it got stopped for a gain.
Yeah, that's all good. That's the smartest way to do it, honestly, because like then you won't think back at yourself and be like, "Oh, why did I not hold?" As long as you're in the profit.
Oh yeah, absolutely. Wasn't like I took a loss or anything on it, so that one played nicely. And then right now I am watching Tesla to potentially go long on Tesla. I'm looking at the 878 level is where I would like for it to get. So it's not, well, I'd look, even 879 would be like confirmation right here.
Yeah.
It's just not breaking it. It's kind of wavering. But yeah, I think 879 would be confirmation for me on Tesla.
Yeah, it needs to hold above there. Just make sure it doesn't reject off the previous resistance from like earlier in the day.
Yeah. So we'll see what happens with that. I may take a position close to close, but I'm not super hot on it. It just seems like right now, as everyone says, the day trader market, right? It's been very difficult for swings, and you never know. Like Tesla, you could open up down 4%, and then just because of theta, everything, it's extremely difficult to recover.
Yeah, 100%.
Yeah, absolutely. Evan, I saw your hand go up.
Yeah, I was just gonna try and throw something over to Brad and talk a little bit about. I know he has a couple of earnings coming up, but if we want to finish with PB and do everything like that, we can go to that after.
Anything else you want to add in there, PB?
No, I'm good. Just thanks for hosting this.
Yeah, no problem. All right, all you, Evan.
Yeah, I didn't mean to like throw us completely down a different direction. I threw my hand up before I thought we were going this way, so totally cool for however we're going at. But Brad, definitely want to talk to you and throw in a little bit about. I know you have a couple stocks that report earnings this week. Maybe some of the thoughts and insights into that, or what you're expecting.
Yeah. So I'll start with Upstart. I think that's one of the most talked about companies on Twitter. So for the company and really what I'm expecting or hoping for is it really all comes down to that 2022 guide for me, because I've been talking a lot about this in the past few weeks, but the macroeconomic climate that we've had, especially for Upstart in 2020 and 2021, has had so many aggressive and unique and random tailwinds and headwinds for the business that it's hard to gauge what the results over the last few quarters mean. So what I mean by that is when COVID first struck, essentially unsecured personal loans, where Upstart operates, that volume essentially halted. Upstart's volume tanked. I think it was like 50% year over year in one quarter, and then a few quarters later, they're growing at a year-over-year rate of 1,000% because of this demand backlog unwinding and uncoiling for the company. So it's really been, for lack of a better term, a very weird period for Upstart. They've done admirably throughout the pandemic, in both from a demand and a margin perspective. I mean, any way you look at it, their numbers have been fantastic. But again, how do I think about that in terms of, is the success unique to Upstart's machine learning models, and the verification algorithm that they've built and the fraud algorithm that they've built to help banks and credit unions kind of undergo this digital transformation more cost effectively and more successfully. So how much of the success is really unique to Upstart, and how much of the success is unique to the fact that stimulus checks were lining everyone's pockets, and so everyone's default rates went down, and so capital markets and institutions were flush with deposits and needed somewhere productive to put these deposits to work, and there was Upstart there to really fill that void. So it was a daunting headwind that turned almost overnight into a really powerful tailwind for the company. And all of that just leads me to that one point of, yes, I'm confident. Yes, I'm optimistic. Yes, I think there's a lot to like here. But I'm a human being who could always be wrong. And I think in terms of when I could kind of become wrong for Upstart, that 2022 guide is going to either put away a lot of these concerns that I have, these yellow flags that are starting to build, or it will confirm them and turn those yellow flags maybe into a darker red. And I want to say, I'm a huge fan of Upstart. It's one of my largest positions. I've held almost my entire position through all this entire dose of volatility. I trimmed a little bit a few months ago, but I've since added all of that back and then some. I admire the management team. I admire all of the third-party data that they seek out to verify the value proposition that they're saying they're offering, because everybody with an artificial intelligence model says that they're better. But when you have third parties like the Consumer Financial Protection Bureau and like Kroll Bond Rating Agency all vetting that information with their own credit parameters and saying, yes, that is the case, there's a lot to like. But at the same time, I just really want to give up the message for this company and this earnings report of cautious optimism, because I really am a big fan of the company and what it does. But these last 18 months have been truly historic and truly unique in terms of headwinds and tailwinds for companies, especially participating in capital markets like Upstart does. So just very excited to get all of this information out there and across the tape, so that I can kind of reevaluate and recollect my thoughts on the company and kind of decide how I feel about it going forward. Again, optimistic, but also cautious optimism. In terms of numbers that I'm really paying attention to in this quarter, so one of the key risks for Upstart is that it's a heavy reliance on capital markets. That's going to continue this quarter, so I'm really not looking for that to fall. But in 2022, what I'm really focused on is on the Upstart's cash flow statement. They have these two line items where it's volume that has been originated by one of their conduits, which is usually Cross River Bank or Finwise Bank, and then immediately repurchased by Upstart to sell through capital markets. So that one key performance indicator really highlights their reliance on capital markets, as opposed to being able to rely on these banks and these credit unions to actually retain the loans on their balance sheets themselves. So I wrote a deep dive about Upstart. It's all free. You can go to my Substack and read all of it. So I won't get into why we want the loans being retained by banks and credit unions, but to put it plainly, we objectively want these loans being retained by credit unions and banks. So I want that trend to play out in 2022. I want the revenue guide for 2022 to be above 1.2 billion. I want them to continue seeing really precipitous sequential partner adds, their network. And then in terms of wants from a margin line perspective, for a company this early on in the S curve and the growth curve, they're already at their 45% contribution margin target. They're already at a 13% GAAP net income margin, so no adjustments made. So in terms of margins and what I'm looking for, I almost think that they can afford to see a little bit of margin compression in the next year or so to really juice the growth engine and the marketing engine that they've established so successfully. And they're planning on doing that with a microloan business, with a mortgage business, and with a small business loan product that will all be debuted in 2022. So That is what I am focused on for the company. The theme of Upstart for 2022 is what was unique to the pandemic and what is sustainable. I lean towards the success was sustainable, just because of how they create their value and how they've outperformed from a cumulative net loss perspective and from a delinquency perspective long before the pandemic started, and they're guiding to the consumer returning to a pre-pandemic, pre-COVID characteristic, and really their default and CNL rates just returning back to pre-COVID levels where they were already outperforming. So their outperformance has been happening. And when I say outperformance, I mean the loss rates associated with their loan pools for capital market investors and banks is lower than expected. It's been an 8-year, 9-year theme of outperformance. So it hasn't been COVID started and this company came out of the blue and started creating really profitable loan pools with real alpha for these investing institutions. It's been almost a decade of this. So yes, optimistic and yes, cautious. And I'll stop sounding redundant and move on to Trade Desk, which I'll cover a lot more quickly because it's a lot less dramatic than Upstart. Again, this software player with leading market share in the programmatic demand side advertising industry from an open internet perspective. Obviously, Google and all the walled gardens have large market share from a non-open internet perspective. But almost everything is recurring. Everything's highly visible. The margins are fantastic. They have a several-year track record of under-promising and over-delivering. Jeff Green is one of my favorite founder CEOs in the entire world because of that, and because of how eloquently he speaks and how boldly he speaks on these conference calls with promises that seem to always come to fruition. So in terms of what I'm looking for Trade Desk, just another fantastic quarter because it's been 20 of those fantastic quarters in a row since the company's gone public, again facing really broad ranging backdrops and being able to thrive through them all. With that all being said, it's a very expensive company, so we could see a fantastic earnings report coincide with a negative price reaction because of the monetary environment we're currently in. But for me, really just focused on the numbers continuing to be great. And it will be interesting to hear more color on these programmatic demand advertising platforms they built for Walmart and they built for Home Depot with their new Solomar product of really connecting marketing dollars to sales dollars to give more visibility to the demand side on how their marketing dollars are performing. They've just been signing these massive retailer deals left and right since they started with Walmart and looking for more momentum there. Because really what that does is it insulates them from a first-party data perspective from Google or from Apple deciding not to play nice with IDFA or these other privacy and targeting restrictions and changes that they're making because Trade Desk can then just lean on Walmart's data and Home Depot's data and this vast network of partners that they've built in order to really combat these issues, not to mention the fact that only 10% of their business is really vulnerable to these targeting changes. And we've been told in the past explicitly that it has no material impact on their business. And they've shown that explicitly over these last few quarters while we've seen the metaverses of the world or the metas of the world and the Snapchats of the world. And all these companies dealing with IDFA headwinds, Trade Desk has really put its head down and endured and executed regardless. So really long answer. I got a little carried away there. So I will stop talking and pass it on to our other talented speakers.
Fascinating. I'm getting even more bullish on TTD. That's one which I've been watching for even a shorter swing as well. So what day are their earnings?
Oh, wow. You'd think I know that off the top of my head, wouldn't you? But Upstart is Upstart's tomorrow afternoon, and then Trade Desk is the 16th, so Wednesday morning. And then they usually report at like 8:30 a.m., 9 a.m., and then the conference calls around noon. And I'll be sending out earnings reviews for both of those because I know FinTwit cares a lot about both of the companies, night of, day of. So yeah.
Perfect. Thank you, Brad. Evan, any follow-up questions on TTD or Upstart there? I could dig in a little bit more to TTD.
On you. Just excited we could bring Brad more into it. Excited to hear his thoughts on some of these earnings going forward. Maybe a little bit of a preview, a hint on what we'll be talking about on Thursday Spaces.
Absolutely. Okay, so I'll talk right here about TTD for a second. What I like a lot about TTD is that while a lot of the rest of FinTwit stocks, after having that run up in 2020, they kind of had another run up in 2021 and then gave up those gains. TTD didn't really do that. It kind of just consolidated for all 2021. It had peak, a peak around that December range, and that went down about, oh, wow, I guess it fell about 40%, 50%, which it didn't even look like that on this chart because it really just to stay around there. So it fell about 50%, but that was peak to trough. And then if you go from that trough, you're going from 48 and it went up all the way to 110. So I guess you're going up about 100% there. And then it came right back down, just right back down to like that $50, $55 level. And now it's just staying here. And what you can see that reflected in is there's a huge amount of volume right here around the 76 mark. And that is coming in. I'm not seeing a number on it. Okay. I'm not seeing a number on the exact amount of volume, but I can see it's pretty large. And what you can also see is if you go back to that big red selling day, which was on May 10th, which I'm going to assume is probably earnings related or something along those lines, where it just had that drop off, and you drop a volume weighted average price, so an anchored VWAP right off of that, that'll take you to literally where we are today. I mean, basically, it bounced right off of that anchored VWAP today, and it's been going all around it. So what that means is, if you go back to the last or the biggest day of volume that this thing has had in, I don't know, its existence or something like that, from that day till now, people are basically even. They're flat. A lot of people are sitting right there flat. So that's where earnings can be a really nice launch pad or a big drop, right? So a lot of the way that people play these type of earnings is with a strangle, because what you can look at this and relatively assume is if this is to drop maybe 5-10% below that volume weighted average price, probably people are going to have stops there. Very likely they're not going to want to take too much of a loss on their initial position. And if the drop's even below the 20-day, which is at like $70, there's probably some stops that are going to start kicking in. And you can then see that red that brings you down, kind of like that candle that we had right back on February 2nd. You saw it was below 200-day and then fell right below the volume weighted average price. And once it did that, everybody and then hit the 20-day, it just sold off. And then it recovered because people bought that dip and it came back up, and now it's kind of coming back down. So the question is right here, is it going to hold it? If it holds in the next day or two and does kind of a reverse off of it, then earnings looks pretty good. A lot of people are looking at this and kind of, I think, understanding, that they have an opportunity here. We've seen solid earnings beforehand with TTD. They're not in the red right now. They can just hold their position. They're not getting stopped out. And that's when you see a big move upward. So that's just the two sides which I'm looking at on TTD, and why I find it super interesting right now. It's kind of like, especially for something like a pinch or like a strangle strategy, because I think it has an opportunity to move largely in one direction or the other. That's what I would assume from this earnings. I know that there's different websites that people can look at that have other, gauges where it'll show you, hey, a 10% move this way, a 10% move that way, kind of whatever it is. So just my take on TTD right there. All right. PB or Sarge, and you guys want to weigh in on TD or Upstart, any of these other ones?
Not neither one of them right now. Upstart does look pretty attractive. It's on my thought list. But if you just want to grab any old stock that's reporting the next couple of days, has anybody thought about Cisco yet? Cisco reports with NVIDIA on Wednesday night, looking for 81 cents, only on about 5% revenue growth. The news this morning was that they had made a run at Splunk, or bid them about $20 billion for their company. Stock's worth about 19.9 according to its market cap, but they don't have a CEO. They've been losing money, I guess, for a couple of years now. Their revenue growth has been dwindling. It had been averaging maybe 20% each quarter. This quarter, we're only looking for about 4% revenue growth. So their business has come kind of to a screeching halt. It tells me that Robbins, because Cisco has been a serial underperformer for years now, it tells me that Robbins is serious about buying some growth. Maybe maybe acquiring a technology that could help with Cisco's cybersecurity business and a couple of their other businesses that have not performed as well as expected when they started them out. It just kind of tells me that maybe Cisco is just starting to get serious about trying something different, because what they were doing wasn't working, which would be a positive development, because I do believe Robbins is a competent guy, and they do pay a 2.75% dividend yield. So I just initiated a little bit of a position in Cisco this morning, and I'm probably going to add a little bit to it going into the earnings, I'll try to be at about an eighth of what I consider to be a full position by the time the numbers drop tomorrow night, and then we'll see where it goes from there. I'm sure Robbins will have a number of questions to answer on the press conference, so it could go either way.
Okay. Yeah, we'll be keeping an eye on that. PB, what's up?
I like the Upstreet chart. I think like it's bottomed out, and as long as it keeps having lower lows, it should be good. And the 120 break would be nice. But earnings wise for this week, like the two I'm gonna be taking a lotto in are Roblox and Nvidia, just because like when Roblox had started, I'm not sure if you guys remember the last earnings, but they absolutely ripped. So that's just like why I'm doing it, honestly. And Nvidia, I always like to do like a strangle type of move. Like I buy calls and puts because they always have like a pretty big move. But yeah, that's like my thoughts.
Okay. Thank you, PB. Keeping an eye on that. So let's see what the market is doing as we move into the last 4 minutes here. And again, if anybody has any trades that they're looking at or anything they want to chime in with, feel free to just throw those hands up. I am watching. All right, coming back onto the 5-minute chart real quick. Looks like we are going to come up today in power hour. So SPY started it out. If you go back to around 3, it was trading right around 438, and now we're finishing closer to 439. So the bullish rippers power hour does hold, and actually, if this green candle can break another couple cents upwards, we'll break through the 200-day on the 5-minute. And maybe we can even finish closer to 440. We might get a power push here in the last minute. Keep an eye out for that. All right, let's see what else is going on. Mass, any other thoughts on some of the earnings this week that we've chatted about, or you're mostly sticking to the oil, gas areas?
Yeah, I'm just watching my oil and gas. That's just what my focus is on. I like looking at my scanner in the morning, looking for anything that's breaking out on any kind of news with room on the longer time frames on the chart. That's kind of what I look for every morning. But yeah, really just kind of just watching these Ukraine headlines. They seem to be driving everything right now, and UNG is trading almost in direct sympathy with the VIX right now. I mean, if you lay over like a UVXY chart with natural gas, it's almost the same chart. So that was pretty interesting as well. But yeah, it's gonna be interesting to see what futures say tonight, and kind of how this sarcastic Ukrainian president clears up his PRs from earlier in the day.
What was the big gas and oil headline? Wasn't it crude 95 earlier today that we saw? Or is that right?
Yeah, crude's as high as it has. It's higher than it's been since 2014 today. So it's breaking a pretty good record today. So it'll be interesting to see what happens as we approach 100 here. But it all looks directly tied to this Ukraine thing. I know if they invade, which in my opinion I don't think they will, but it looks like either way the tensions alone are going to be driving the supply of gas way down. And Putin is using gas and energy as he's weaponizing it right now, so naturally it's gonna drive the price. So there's a trade here. It's just somewhat of a volatile one, and you got to be on the up with the headlines for sure.
But the U.S. producers are getting their tails kicked today, right? So I mean, does that make sense to you?
What I was reading recently, it looks like the world's natural gas supply, it's like 40% is controlled by Russia. So yeah, we have a lot of natural gas here, but I think a lot of that recently has been taking a hit.
Okay. All right. Looks like we're coming into the last minute here before market close. Pretty solid day overall in the market, personally. And also, if you're looking at, I think, Qs, you were pretty good there. Finished up 0.16, or I guess it's not finished technically. There's some after hours movement, but SPY finished down 0.32. Wasn't able to break through the 200. It actually got rejected off of it and is now coming lower. Ooh, coming lower fast in after hours right here. A little sell off in the last minute there, so we'll see what happens. But we did get the bullish rippers. I wouldn't call it a melt up, but we got the patented bullish rippers close to the day, moving up into the green. Was feeling pretty good. Okay, one more time, if you've been in the audience for the last hour, we had a great panel who filled us in with a bunch of different information. Brad, our resident long-term approach guy, definitely be checking everything he's out. A lot of write-ups coming on news this week. You got Sarge, he's our Wall Street guy, coming in on every different industry, always has opinion. I love it. Big writer, put out a lot of content. If you've checked it out, PB was on with us this morning. Fantastic. You know, what he's doing at a young age and a lot of accuracy within his trade. So make sure that you're looking through his timeline. Mash joined us. Big focus right now on oil and gas, which are really powerful industry at the moment. And, you know, have been for a long time and has its ups and downs, but there's plenty of opportunity to play it. And then Matt coming at it with the hedge pressure. Matt, sorry I didn't get more of you in on this for this power. Is there anything else you wanted
No,
to add
it's
in?
actually great because I've actually been driving. I went to some meeting. I had to go like across town, and so I've been in the car for a while. So it's actually perfect because I literally just got home when you called my name. It's perfect. Like I guess I'm watching my app is up. It looks like resilience dropped below, so I think or S&P. So maybe it looks like we're selling off into the close. Let me open up my charts really quick. Yeah, it's just like, markets just gonna kind of do what it's doing right now. I don't see any stabilization. Just actually, we are kind of just sitting flat, I guess. I mean, with volatility still rising, Wednesday is always a big deal. The third Wednesday of the month, you always have the flip over of a new VIX month, right? VIX monthly options expire on a Wednesday schedule as opposed to a Friday schedule, like most equities. So you'll see that the kind of the general sentiment changes for any kind of reversal typically come after that happens. You might get or around when that happens, you might get a runaway reaction, maybe leading into expiration. But usually, I always like to think that whatever's happening usually proceeds until that day. And with big earnings coming up, we don't really have much, I guess, reason to believe the market's going to turn around and flip around just yet. So, like I said, still sitting out, still sitting pretty. I take kind of scalps one day at a time. And I do really think that we're going to sit still here for a little bit. And I have some lower targets on the S&P. And I think as long as we don't break through them, we should be fine. Actually, can I tell you what I'm looking at here? In general, I had a 435 was kind of where I was thinking we would settle out in this whole sell-off, and below here there really doesn't seem to be much in way of the catalyst. I think anything the Fed can do will be expected and priced in, and other than just some last minute strikeouts with Nvidia, the Qs could tank for a day or two, but I don't think that as long as we don't fall below these lower lows from earlier in the month or late last month, I think the market's going to be good. So nothing for me, just kind of waiting for that. I'm going to be very happy to pile in long as we stay above these levels. 425 S&P would be kind of like something that would be cautionary. And QQQ, let me take a look at that. If we break below that, and the Qs are already still kind of like trying to test their lows. So QQQ, anything below 330, and then I'm a little scared. So I'm optimistic, but I just don't want to, bottom pick before major earnings. So not yet.
Okay, very fair. Yeah, so like I was saying, Matt, they're great with the hedging pressure. And then, of course, if you're enjoying Spaces, stock market news, the Wolf account, some go-to for Spaces, as well as your finance information. And then, of course, Bullish Rippers is kind of our combo account. All right, I see Mickey James requesting. See what that's about. And then we're going to go into...
Hey, man. Quick story out there that I'm reading. Monster and Constellation Brands are reportedly in talks about a possible merger. So I'm hearing that Monster is moving higher as well right now. Unconfirmed.
Monster and which
It
brands?
looks good. Constellation Brands, they own Corona.
So I'm getting Corona energy drinks now.
They own
Corona,
some Canopy Growth too. So if there's ever
that's a big, and Coca-Cola's involved in that too. I think that's huge.
Are they?
I think they're a big stakeholder in Monster.
Yeah, and then Constellation has a large stake in Canopy. So if we ever get federal legalization, I guess they'll gain exposure to cannabis through that as well. Although there's a few dozen better options to invest through multi-state operators in the United States, but that's a different conversation.
Cannabis infused energy drinks.
It's gonna be wild. I wonder how much is the $5 billion Constellation invested into Canopy worth now. I remember hearing they had to write it down, but I have no idea what they value it at now.
Yeah, it's a
unless we're
lot less.
calculating.
I don't know. I don't
Yeah,
know the exact number. Maybe Sarge does.
yeah. I don't know the number, but I know it's been catastrophic for them.
But hey, I'm seeing Monster up 1.4%. Let's see. Let's check Constellation perhaps. Kind of unchanged a little bit. I would double check this one though. I haven't been able to see it as much. I would still call it a rumor. But yeah, back to you, Gav.
We need Gerg's Bloomberg terminal for these exact moments.
I was going to throw it to you, Evan, if you want to go into some earning areas.
Yeah, so there definitely are not as many stocks today. I've been saying that report that people really care about. We got Avis, which did just report EPS of $6.63, which beat expectations of $6.15. Revenue was 2.57 billion, which beat expectations of 2.41 billion. So looks like the car rental business, I feel like as we can expect based on inflation numbers, is making a lot of money right now. I don't really know what other companies do people care about that reported. I really don't think there was that many. I think we have we're in the last full major week of earnings, and a couple of the next upcoming days will be busier. I'd say tomorrow and Wednesday will be our busiest days this week.
For me, Friday, I don't own DraftKings, but I am focused on DraftKings for Friday just because I own Penn and I'm a big fan of the Barstool assets that it has. Just because I mean they're quickly working their way towards EBITDA positive for the Barstool Sportsbook as a standalone product, and it's supposed to be contributing meaningfully to EBITDA by 2023. So I think that's going to put a lot of pressure on the FanDuels of the world and on the Bet Rivers of the world and on the DraftKings of the world to stop really burning through cash at crazy amounts. Not saying it's the wrong decision because in exploding industries like this one, cash burn is often justified. But really interested to see if there's maybe a strategic pivot from some of these really heavily cash burning sports books via Barstool and Penn, putting the pressure on. I think, but we'll see. I'm obviously biased and should be taken with a grain of salt when I talk about DraftKings and Penn because I own one and not the other.
Okay. I totally hear that. Let's see what else is going on. So after hours, seeing a little bit more movement from so SPY actually did break through that 200-day on the 5-minute and after hours, which is good. Tesla inching a little bit higher. Disney started out with a little bit of gain for the week after that big week last week, but definitely some splits. A lot of stuff. I mean, we just mentioned DraftKings down 5.5%. Oil Gush down 5% today.
Hey, so is DraftKings was down 5% today? You said.
I see DraftKings down 5%, 5.27. It's down. It's trading at
Interesting.
$22.
I'm interested.
Yeah.
I definitely think in that time and in that area, obviously the Super Bowl was such a big event yesterday. It's kind of interesting to see the fallout of that and how it affects. I feel like conventional wisdom and people, when they're thinking simply about it, like, ooh, Super Bowl is coming up, let me go and invest in the sports betting apps. Which this year they've had a pretty decent run up, but now that we're out of it and the day after there isn't much. I also find it kind of interesting to look at like the stocks with the best commercials that got the biggest pop. Like I've said it a couple times on here, the Coinbase one. That's the one that we've seen some real numbers for, which I thought was very fascinating that they got 20 million people to the website. Someone did make the point though that I was like, oh, okay, yeah, that could be also a part of this. That the website went down, and how much of this was people just re-clicking in and trying to get back in. I don't know what the numbers are, but I did still think it was very fascinating when you break down the numbers on how much the spend was and how many people clicked into it. The positive ROI of that ad relative to a lot of other stuff and a lot of other places, people that are advertising in crypto. So I thought that was fascinating, and maybe some of the EV companies. When you see 20 ads in your face from OEMs and actually some non OEMs as well that are really all talking about EVs, I thought, hey, maybe there's a chance that some of those stocks go off, or maybe some of the EV charging names or EV sympathy names, as Stock Talk loves to talk about, may have ran as well. And I haven't really gotten the chance. Let's check. That was Blink. Yeah, nothing much. So it is interesting to see how these type of events a lot of people like to talk about and do, and don't probably have the largest have the largest effects on the market, but But hey, who knows? Let's see. 410 tends to be a lot of times when stocks and stuff cross. Just give one more check, and then Wolf. I see where we're at. And then we could head into wrap ups as well. Definitely throw it around here. Some of the great stuff people are doing. Yeah, not too much there.
I don't see Advanced Auto Parts yet. They're supposed to report tonight, but the stock has shot down $5 and back up $5 since the bell.
Let me check in and see what time they actually normally come out. We can go from that. Here we go. I'm seeing 4:30, so I think we actually might have a little bit on that one.
Yeah.
I know ammo people. It gets high rated on this stuff. I don't know if people care about it. Ticker's POWW. They report EPS 14 cents, beat expectations of 10 cents, revenue of 64.7 million, so a lot smaller than I normally talk about. But yeah, missed expectations of 65.67 million.
Hey, Wolfie, I brought you up real quick. Just want to see if you had any thoughts on the day in the market and anything you're looking at for the rest of the week.
Yeah, I thought I thought it was really random, weird action. It's really tough and messy, for the most part, just kind of sitting still. But uh, I like gold. It broke out last week. I bought it last week. It was in a downtrend from August of 20 up until last week, and it broke out. It's pressing up against, I think, 175 on the GLD, so like it's an important level. So I'd like to see how that behaves. Um, Oil like got a bid, but oil's tracked higher. Like if you put a ratio between gold and oil, it kind of flipped where gold's now starting to outperform on a relative basis. So I want to see if that kind of sticks. Nat gas is totally Russian dependent. And then outside of that, I thought it was interesting that like some of the like you can't get more like bearish headlines or bearish sentiment or bearish reasons. And still you still see some of these names like barely squeak red before they get a dip by. I think it's really weird that it's got to be really, really tough to be like a legit bear, like someone who's actually not just looking for a trade, but is actually bearish. Because I think from my watch midday, Tesla broke green to red for like 30 seconds. And so I think it's interesting because you have the Fed's closed door, you have, the Russia Ukraine thing, you've got a macro effects, you've got inflation, you got like pretty much every headline you could possibly have to tell you to sell things, and you've got a really crappy tape, and I agree with all that, and I'm kind of like leaning more pessimistic than optimistic, but I don't see. I think it's really really tough for someone who's like actually bearish. I think so. It's a lot of just like sitting around waiting for some of these headlines to resolve. Only real trade I've had on for the last couple of days has been gold GDX. And so I just kind of want to see if there's follow through there. I want to see if there's any like resolution here. And I think that with the VIX where it's at and with volatility where it's at, these like midday, just take a look at Amazon for example. These midday like 40-point moves in each direction in a matter of like 7 minutes will blow up anybody if they're just like committing real capital. So I think it's a rudderless ship, a leaderless market. And it'd be interesting to see if there's any sort of any sort of relief that comes out of it if anything were to happen that's positive.
Very interesting. Evan, you want to weigh in on that?
Sorry, there was just a big news story that just came out, so I wanted to jump in with it. Warren Buffett's 13F actually, well, Warren Buffett's Berkshire Hathaway, their 13F just came out. My dog barks in the background. He bought 14, or someone at Berkshire bought 14.7 million shares of Activision Blizzard last quarter. So I'm still digging into the rest of the 13F filing compared to the last quarter, but yeah, that's the headline I'm seeing out of it.
Not very surprised. Wolfie, bringing it back to your point, with all the volatility, have you found yourself playing upside or downside more?
So it depends on where you are in in the move. So early on, I played downside. Now it's more of just like a wait and see, to be honest with you. When you have moves that are like as wide as we've had, and you're kind of chopping in this no man's land, like for me, I just map out like the pivotal levels. So when we rallied up to the 100-day, basically, on the S&P, if if you had any longs, and in my case, I think we had like a couple longs, we had like Roblox or something. Um, dump out of it, and then just kind of wait and see for the next move. And then since I was selling longs into strength, I wasn't shorting. So in that case, since I'm flat-footed, what I do is I look for inflection points. So like on Friday when we broke through the 200-day on the S&P, that was like an inflection point to actually short. When the Nasdaq gave up the 5-day early Friday, that was an inflection to like short high beta. But once you get those like bigger moves, I find that it's in this tape because of how fast things flip. Um, it's better to just kind of like ease off the gas and just take a seat for a minute. Um, bought, like I said, I bought gold, excuse me, early Friday, and I've just been sitting on it for the most part. I scalped Amazon short on Friday and Tesla short on Friday, but for the most part, just sitting on like protecting capital because I didn't short into the 200-day.
Okay. Yeah. That's always a scary thing to do with the potential for a big bounce, right?
Well, it's not necessarily the bounce. So, with the VIX where it's at, you can go sideways and lose because I trade options. So we can go sideways and lose money. So for me, when I, unless I'm scalping something on like a really, really short term basis, um, after the move we saw on Friday, it's not where I want to press my luck, especially with that 242.50 basically level on the Qs, excuse me, 342.50 on the Qs basically as support, and then you get that 435 level on the S&P as support as well. So like I don't like the press bets. If we were to get like some sort of exogenous move down to 429 or 428 on the S&P, I'd look for people to step in and try to support it unless you had like a significant headline. And then on the flip, if we rally back up towards that 100-day, if I have longs and they're working, I look to offload. And I think that's kind of like the environment you're going to have until you get some sort of, whether it's the Russia thing goes away or takes a giant step back, or whether, the Fed takes a notable action where they're like, we're not going to cut as aggressive. I don't know. I don't know what they could possibly say. But it's one of those wait and sees.
Okay, yeah, that's definitely fair. We're gonna move probably into some wrap up. Any other comments or anything else you want to share? Appreciate you coming up.
Yeah, no problem. I don't really care for unusual options activity, but I know a lot of people do. There are a couple stocks that saw some call buying that was unusual. One of them was Rivian. You had this week's 65 calls, uh, bought at about 9,000 calls were bought basically, and that pushes implied volatility up 122%. And then you had Space SP or Virgin SPCE 9 calls at 11.8K, again 120% applied volatility. And then I'm interested to see things like Roblox and Roku this week on their earnings. If they could be less bad than people expect, I think it'd be interesting for ARK.
Good points. Definitely continuing to keep an eye on ARKK. A little bit difficult to do technical analysis on ETF since there's always moving pieces, especially one with ARK. But it certainly needs some type of boost. It's kind of doing like an SE formation right here, right where it had that big run up and then just I guess not as fast of a drop, but drop, little bounce, and kind of looks like it's continuing to drop here.
Yeah, so I'm not charting the ARK itself. I'm just saying some of the heavier names that she owns have earnings, and so if Roku, if Roku shits the bed, and if Roblox doesn't do as well as people expect, you could see that resolution lower, especially with the move Tesla just had, and people will probably look to lock in some gains there. So I'm just kind of curious to see how those earnings come out.
Okay, perfect. Thank you for sharing, and hopefully everybody was able to garner something from that. I hope this has been nice and directional. If you do gain anything in your audience from anyone that's up here, I recommend again clicking in, checking out everything that they are doing, and throwing them that follow. Before we go into the rest of the speakers for a brief wrap up, just want to share a brief 30 seconds on the Twitter Spaces we'll be having this week and how you can find them and easily make sure that you're attending them. So if you go to the pinned tweet on the Wolf Financial account, that is one of the ways that you can go ahead and see the 19 different spaces that we are doing this week. This is the third of 19. But the easiest way is, we know that many of you are extremely busy people, right? You have nights out with family and people. During the day, you have day jobs and commitments, but you still want to attend and learn from spaces. It's a great thing, right? We can throw it on in the background, on the side, throw an AirPod in, gain some knowledge and learn from some of the best in the business. But how can you know when these are happening without consistently scrolling through Twitter, setting reminders, doing stuff like that? The easiest way is simply to join our free calendar. So myself and Stock Market News have created a free public Google Calendar. This is where we put all of our Twitter spaces. So everything is uploaded and shared within the calendar. On that calendar, you can actually see weeks in advance when we're going to have spaces. You can see who is speaking on them, what the topic is, and more. So it is just a all-in-one tool. And now we even retroactively go in and take the recordings of the spaces and plug those into the notes inside the calendar. So you don't have to scroll through timelines to find recordings. You don't have to go back to certain, days on Twitter. Just scroll through your calendar on your own calendar and see it. It also doesn't block up your calendar. You can toggle it on and off. And if you don't like it, you can unsubscribe for free at any time. There's now 3,500 people using this to find and enjoy Twitter Spaces daily. I suggest, if you haven't already, DM this account right now. Say, hey, I just want to join the calendar. All you need to send over is a Gmail. That is it. And you will be on it within a day. That is the easiest way to find all of our Twitter Spaces. Completely free, never anything passed down. We don't share email with anybody. And again, worth a try. You never know. You could find a lot of Twitter Spaces that are super helpful. And you can plan weeks out now that we've gotten even better and better at scheduling them. Evan, is there anything you want to add on to that before we go into wrap-ups?
Yeah, no, definitely. That was a fantastic explanation there. Big shout out to Bullish Rippers for always putting on these amazing spaces. The Green Raccoon. If you enjoy spaces, if you enjoy FinTwit, if you enjoy anything like that, definitely make sure you're checking out Bullish Rippers, the Green Raccoon. Make sure you're checking out all the other speakers up here. Big, huge, massive shout out to Brad, Sarge, Wolf, Matt for coming on here and really spitting some information and really, informing the people. I love to have it. And, they're not getting paid to do this. They're coming up here for free. And the least that we can ask of you is to go in and check out their timelines, check out what they're doing, and give them a follow. So we definitely appreciate that. Big shout out to all the listeners for coming in here and hopefully getting some value out of this. It's, what makes it, worth doing every single week. And thank you to you, Gav, for putting on this fantastic space and helping us host it. I see we got the Wolf account back up here. Big shout out to the Wolf account. Make sure you're checking that out and giving it a follow as well.
Appreciate it. Yeah, I was just walking in between rooms there. Okay, awesome. Let's go around and see if anybody else has anything they want to add. Brad, you want to go first?
I think I talked more than I probably should have for this space, so I will just say thank you for having me and excited to do more of these this week and excited for earnings to keep coming across and yeah, hope everyone's doing well and have a great night.
Perfect. Thank you, Brad. Matt, I know that you're driving, but is there anything else you want to say?
Nothing much. Just be careful through Wednesday. It's going to be probably a shaky, bumpy ride until then. And then I hope the market stabilizes and we can get back to a nice, cozy ride back up in the next couple of weeks. So hopefully maybe sooner rather than later. So trade carefully and, nothing wrong with a little risk management in your diet. If you're not sure, don't have to act.
Perfect. Sarge?
All right. From a macro perspective, just remember PPI tomorrow morning. We're looking for a deceleration of inflation, and it's key that we get it. After that, Wednesday, we got retail sales and industrial production. For the Fed, like we said, you have the minutes on Wednesday afternoon. You also have Bullard again and Mester. So two hawks on Thursday. And on Friday, you got Waller, who doesn't really, I guess he's a pragmatic guy. He doesn't really express one opinion one way or the other too often. But Williams wraps up the week at 11 o'clock on Friday morning. And Williams is pretty much a lifelong dove. So that's how the Fed chose to wrap up the week, which I think is interesting. Leon Cooperman also filed his 13F while we were speaking. He has apparently vacated his positions in Alibaba and Facebook. And for me, going out to the rest of the week, I'm long Viacom for Tuesday night. I'm long Cisco and Nvidia for Wednesday night. I'm long Palantir for Thursday morning, and Levant LTHM for Thursday afternoon.
Okay, thank you for sharing those with us. All right, stock market news. Anything else from you?
Yeah, quickly, I did, objectively just post a fantastic tweet from the Rippers account. I'm going to read it up here, pin it up top quickly. But yeah, so if you didn't know, Warren Buffett's Berkshire Hathaway, Apple is definitely the largest holding of his in there. And he currently owns, or the company currently owns 157.4 million shares of Apple stock. And that means the dividend that they just got, Apple just paid their quarterly dividend. They just got a $34.6 million dividend check just from their Apple holdings. So a little bit of interesting information there. A lot of cool stuff on the Bullish Rippers account. Make sure you're checking them out. Give them a follow. Big shout out to all our other speakers for making this spaces so fantastic. And big shout out to you, Gal, for helping us put it together. So, very grateful for these fantastic spaces that we can get some people in here, share information, and hopefully, based on all the messages I've been receiving from people in the crowd, people are getting some value on it on the back end. So just all great things we could do. I'm super pumped up for the rest of the week. I know we got a lot of really busy days. This was the lightest day of earnings by far. So, we got Tuesday, Wednesday, Thursday, definitely going to be live for the earnings, definitely going to be live all day. We still got a couple more spaces today. So I'm still pumped. Just the beginning of the week. It was a slow start. I won't lie. Super Bowl yesterday. Slow start. But definitely going to finish strong and get the middle part strong as well. So I'm super excited, and I will quit blabbering here and throw it back to you, Gov.
Sounds good. All right, that's going to do it for this one. The next space that we are going to have is going to be at 7 p.m. EST in tandem with Asset Dash. And we are going to be doing stock, crypto, and NFT pitching. So a little bit of something for everybody. So if you are interested in any of those categories, I'd recommend marking it down for 7 p.m. EST tonight. We're also going to be completing a giveaway for a $700 NFT. So that will be going out tonight as well. Pretty good odds to those that have entered to win. So looking forward to seeing that. And I think that that's going to be pretty much everything for now. Really enjoy these power hours. Always a source of knowledge. If you didn't place a trade, don't feel bad at all. That's completely fine. You came, you learned, you understood what was going on. Perhaps you waited for levels of confirmation. If you did place a trade and you got out, took some profit, good stuff. If you're waiting until tomorrow, you're swinging it. We'll be live tomorrow around 12 p.m. EST. So maybe if you're still hanging it on, you can drop in there and we'll be able to share with you our thoughts. We're going to do some live TA during that space. But for now, I will say goodbye to everybody and see you all in about 2.5 hours. All right. Take care, everybody. Have a good one.